European stocks rise for the first time in 3 days as Greece wins parliament approval. Federal Reserve Chairman Ben Bernanke will tell Congress that financial strings to Europe will potentially cause stress on U.S. markets. And Oracle beats estimates and delivers first quarter earnings. I'm Taylor Schrantz, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Stephanie Link, Director of Research at The Street. Welcome to the morning call.
Yes, so here we are. Markets, I think, have futures are up a little bit different story than yesterday. Yesterday we came in 7-8 handles down, a lot of big concerns out of China, and you'd think that it was somewhat old news.
Well, I do. I mean, we know that China is slowing. We know that their GDP is going from 12% to 7.5%. I think that they are in the process of a soft landing, not a hard landing. I do think very strongly that the government there will not let them hard land, and they will aggressively start to ease as they need to. But you got to get ugly before you ease, right? It has to be really bad. So that's why I think people are trying to, it's so hard to kind of figure out, is it really, where are we going in China? I would just say that, you have to use these as opportunities. And when stocks get hit so much, like yesterday, some of the materials, some of the industrials got hit, I think that's when you have to be buying them.
Yeah, and you've been so staying with that course. I've seen you on CNBC, you've been here, you've been buying, you've been rotating in and out of sectors. Yeah. And I feel like so many people aren't doing that. So many people are trying to look for excuses for a correction, look for excuses to like call a top because of the Apple event. And where the money's been made is by following the trend. And yesterday, you didn't really know what to expect, but if you look at the chart of the spiders, it told you what to expect because it held higher. Look at this upper range that we just held. We held the 10-day moving average once again. This is that gradual trend that we've been following. We did retest it somewhat, came into like remember that, 1340 in the S&P, came back up. This is when you had to switch gears again, saying, you know what, market held in there, get back long, took out the highs, nice wide range bar here, a potent up move, and now we're going sideways. So the more sideways we go, the more digestion we have, the better setups we have. And if we take out this, just say, I think it's 1414, the next level on the monthly chart here is about 144, which gives you about 1440, which the whole thing here is actually, it's good to have you here as a money manager. Like just say, in the beginning of the year, I put out a projection saying I think 1420 to 1440. Now, what happens if that's your projection and it happens in the first quarter versus the year? Do you raise them or do you just stick to your prior goals?
Well, I think you have to look at your earnings, right? I mean, if you believe strongly that earnings are going to continue to grow, and I think expectations are like 5 to 7% for the year, I think that's still pretty realistic. Expectations for guidance is also very low from companies. So, right now you're at about, I think about 14, 15 times earnings. I mean, I think you could get actually back to the historical levels, which is like 16 times, without, too much heroics, if you will, right? I mean, I think if these companies just can put up the good numbers, and again, these companies have really done a good job at cutting costs too. So you've got a very lean cost structure, and you've got a recovery in the U.S. You've got some issues internationally, but I don't think it's kind of devastation. So I think you can get to a 16 multiple on the S&P.
If we get to a 16 multiple, I remember that article we cited from Bloomberg saying that right now we're trading, fundamentally, I don't talk it all the time, but we're trading at a discount to the 5-decade average. So if we just go back to the average of the last 5 decades, the last 50 years, that's what took the S&P to 1700, and that's why I went on Mad Money. I'm like, you know what, by 2015, why not 1700, where that other group was like, we could see it this year. I think that's a little aggressive, but, stay the course.
Right, I think that's exactly to your point. Stay the course, and again, if fundamentals remain strong at the companies that you own, then, you just stick with them, as long as the valuations don't get stretched. Now, we've talked about, taking some profits off the table, right, and we'll get into technology in a little bit, but, EMC is a perfect example. I mean, that stock has had a very, very nice move, but it's up 34% this year, so we took a little bit off. Still love the story, still think it's going to be a core position and like the data storage market, but it's time to, just be prudent. So I think that's what you do. You just trade around core positions in this kind of environment.
Trade around core positions, and we call that the tier system because you could take profits, you could stay with it, you could use the chart patterns, but stay the course and feel good about booking money. Now, in the sector spotlight, we're going to actually talk about a few different stocks from different groups, so it's a good variety to keep you diversified. first name that Stephanie wants to talk about is a name that everyone knows, and if it goes higher, I think is good for America, good for 401ks, and that's General Electric, GE.
I know, it's kind of boring.
Not lately.
I know, not lately, right? I know. The reason we picked this one is really because it's a combination, it's a hybrid of industrial and financial. And one thing that we didn't touch on is that the financials really led the rally yesterday, or at least the comeback in the market yesterday, and they've been the leaders year to date. So we actually picked this one because of the financial services group, GE Capital. They're cleaning up their structure. They've sold off assets that are non-core. And then the industrial side, they continue to gain market share. Stock's actually quite cheap still, so I like it.
All right, so that's good. And if you need a variety of positions and you want to be involved in the market, GE has been a name that everyone knows, and now it's starting to act well. I remember last year, I'm like, I can only trade GE 3 times. 3 times, otherwise there's no trade there. But this year, there's been more. If you look at the chart real quickly here, look at this nice breakout above this channel. We look for tight channels, we look for accumulation. On this wide range bar, this was actually a trade besides an investment and besides just having in your portfolio. It cleared this area, and then you had a nice move. Here you have a nice bull flag continuation pattern. This starts to get back above, what is this, about 2036? And you're going to see you have to almost go to the monthly chart to see where it can go. And on a short-term basis, it does look like you have a number here at 22, but there's no reason why it can't get, my voice goes nice and high, to 26, 27. That's how surprised I am that I do think that GE, 25 to 27 this year isn't out of whack.
And that's interesting because that's our target is 25, at least in the short run. So it's nice that it works fundamentally and technically as well.
And then now we'll switch some gears. We'll go to Devon. DVN, another stock acting well. Are you positioned in it, or are you looking to get in it?
Yeah, we just actually started a position this week in it, and it's really just a very, very cheap E&P company. We still like the energy sector, although we did take a lot of profits a couple of weeks ago, and we are underweight the group just because the group's had such a nice run. But this is one that hasn't had such a nice run, and it's actually trading at a 20% discount to its NAV and also a discount to the group. And I just like they've sold off non-core assets. Again, they're doing internal things to make them better and make them more competitive, and it's really just a North America play on in terms of oil and gas, and I kind of like that too, instead of having to worry with what's going on elsewhere.
So let's take a look at the chart. Chart I looked at before looks pretty good. You had a few different areas. Look at this breakout right here. This is something that traders love. Another tight pattern, getting strict, coming to an apex. Or woke up this day. If you woke up on that day, here was your breakout. That was right around the 69 area. Since then, consolidating well. So if you've been starting to buy it, here's your accumulation phase between 70 and 75. As it goes sideways, the next buy area would be above 76.34. That's when momentum come in the name. That's when my guys will probably be all over it. I would say let it go sideways. Let it hover in the top end of what has been this overall channel, and it can continue to show that strength. I think it breaks out and it can continue. Go to your monthly chart here so we could see where it can go. Here's your next pivot here. That's about 90. Okay, that shows you that this can get to 90 before people can come out and say, oh, here's a double top, and that's a nice move right there for Devon.
Great. So then the next one is Kraft, actually.
Yes.
It's kind of boring, and just like the Kellogg call that we made a couple of weeks ago.
And that was good. That was a great call.
Well, you know what? It's in your portfolio. Thank you. In your portfolio, you need to have diversification. You can't have all these industrials and the financials and all this beta, right? You just can't, at least not running a charitable trust. So, for us, for long-term investors, we like to have a balance. And Kraft is actually a perfect story for us because it is kind of this consumer staple story, so it's kind of steady, but they're breaking up the company into two. And that's why we bought this one, because we think that the catalyst will be, as they break up the company into two, the valuation will then therefore be appreciated, and there's a lot of creation here in terms of shareholder value. There's going to be dividends, there's going to be buybacks, and like both of the pieces, I'm not sure which one we'll give up.
Right. So when they divide it, that's when it unlocks, and you want to be in a little bit before. So, well, right now, if I look at the chart, I would say this is another accumulation type phase before a breakout. If you look here, stock had a nice move. Okay, when it broke above this 37, had some momentum, and since then it's been correcting. Nice, slow, methodical. If you're a trader trying to buy momentum, you've been getting hurt here, but don't stray away, because once it starts to get above this, just say 38 to 39, you could see that momentum move for traders. And if you're an investor in a tier 1 in this zone, that's when you add to tier 2. And if you go real quickly to the monthly chart, this stock, actually, this is very important. Look at this resistance that it had. It cleared it, and it's holding above it. That's technically very well, or very good, so to speak. So once it clears this, the next real obstacle is going to be these prior highs around 42 to 44. So very interesting on a long-term basis besides a short-term basis. I think this could work out very well.
Great. I like to hear that.
and a stock that I lost money with because I just mistraded it. we spoke about this, it wasn't ready, but it doesn't mean you can't get back in it, is Boeing. I know Boeing, there's a full story here. Let's let it roll. We'll let it fly.
Oh, God. Well, this one actually, this too has underperformed the market year to date and also its peer group. And this company continues to deliver in terms of, production targets, actually increased their production targets recently for a couple of their planes, the 737 and 777. And without getting too technical, you increase production, you increase your margins. They have their cost structure has actually come down substantially. And their balance sheet is improving. So I like all of that, plus it's lagged the market. So the valuation makes sense. So I think, this one continues to work. We're very positive on the aerospace cycle for the long term.
And you said, what did you say about which conference is coming up?
Oh, yes, it's the Paris Air Show, right. And so you really do want to be long this stock. It tends to trade into the spring Paris Air Show when these companies then they'll announce all kinds of orders and people will be very excited about it. So it tends to psychologically be a good time to buy it too.
So if you look at the chart, and if we want to try and time it with that, with the levels, if you look here, I remember I was talking about this on the show. It just shows you how different time frames and how you have to change. I think if you take a closer look, I was trying to play this breakout right here. This could have been me buying it. This could have been me buying it again, trying to, and then I got shaken out. But you know what? The old red dog wouldn't go back to this name. I think after hearing about this, I'm going to put this in my positions. I'll be in a tier 1, and if we could finally get above 76, 76.30, I think you're going to see another leg to the upside. Just don't overtrade it. I think with the fundamental thesis, you could own some, and if you do catch the day, kind of like here, remember like it traded above resistance, so this was a decent trade, or it consolidated, gave you another 3-day trade. It just has taken its time, and with a little bit more time, with the event coming up as a catalyst above 76, I think it could fly.
Terrific.
And with all that said, we're going to go into a commercial break, and then we're going to come back with Mega Cap Tech.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, we're going to come back in the trenches with Mega Cap Tech, a group that's performed, a group that's surprised many on the street with the actual appreciation, because it's given you some sex and sizzle, and in the last decade, it hasn't really been there unless you've been in the exact right spot. Now, Oracle came out after the close. They came out with their earnings. I want Stephanie to break it down for us.
So this stock is, it's actually indicated higher, right? So it was a pretty good quarter in terms of, beating the bottom line. But I would just say that this stock has massively underperformed the market since the last quarter. Remember the last quarter, they actually very much disappointed across the board. What bothers me a little bit on this name, software was fine. Software margins were good. Hardware. This is the Sun Microsystems deal. People had an issue with this company when they bought Sun Microsystems because they thought, they're buying a hardware company. Right. Are they ever going to get the return? Once again, hardware disappointed. So to me, it's validation that the Sun Micro deal, not such a great deal. And I just think there's other places to put your money in Oracle. So I'd fade the rally.
All right, so it's opening up 50 cents. If we take a quick look at the chart, I remember here with Alex before she went to Bloomberg, and we do miss her. Anyway, this was the last time they reported. Remember that? They disappointed, came down. We were talking about, nibbling a little bit versus prior low, double bottom here as a trade goes in the gap. And like you said before off camera, you think that the market really bailed it out because people just needed something to do. So coming into this 31 area, I would say if you bought it last quarter and you rode this rally, you could sell some here. But if you need to keep some money to work, it might not be a barn burner and it might not outperform the market, but it's probably better than sitting in cash.
Well, certainly, and it's not expensive. So that's there is a you can make a valuation case on this position, and you could make a case that eventually they get the Sun Micro and they can kind of integrate it, and their software business is starting to do better. But I just think there's so many other places to put your money.
Now, one other place that was great this year, which was something that was surprising in my mega cap surprises for 2012, shameless plug, was Microsoft. Microsoft started acting frisky back in December. A lot of guys after a decade-long base said, you know what, they have cash, they have a yield now, the products aren't great, but they made some kind of excuse for their operating platform for mobile, which,
right.
A reason to buy it.
Right.
PS, it's had a nice run. It just had 3 days down. What do you think overall about Microsoft?
Well, I think Microsoft is, again, it's a value play. It does have the nice yield, to your point. I come back to products. I'm not that excited about their products. I don't care if they've got a couple of things on the smartphone side. It's just not big enough. They still have a big presence in PCs, and that to me is a declining business, secular declining business. So to me, that's not one I want to be in. That said, I don't think you get hurt in this name. Again, I just think that there's other places to buy.
So with that said, I would say you don't chase it, you buy the dip here. If you look at the chart, there were some spots that had momentum. So you go to the chart, this is when it broke this downtrend and you had a nice move up, but it's been very methodical, only giving like momentum traders some areas to make money. Here was one of them. Okay, and then again, and I actually bought the dip after 3 days down because it's been working. I'm going to say I could buy tier 1 here. If it changes its composure, it'll break below this 31. If it holds 31, I still think it's going to be fine. If you want to just take a quick look at the monthly chart just to show you kind of what we were watching in the beginning of the year, look at this. Since 2000, it's been in this range, doing absolutely nothing. So it wasn't like I was trying to be a rocket scientist to say that this could break out. All I did is see a nice tight pattern here that's been in check, been under accumulation. It's got how many shares are out there. So here's your breakout. It went above the prior target, but now with some sideways action, it could see this level here. This is the old level of about 2007. This is around 37. So we talked about carefully raising targets. So since it already met 32 to 34, it stays above 30, 31. I think maybe 35, 37, as long as the market keeps doing what it's been doing, which is riding the course.
And the chart's very it's impressive that it can go higher. And again, it's not an expensive stock, and I understand why people would own it. I just prefer IBM, Accenture, Apple. There's so many other names that I would much rather buy.
I agree. And you talked about EMC, which is a name you've been riding for the past few months. You said you might want to trim some.
Yeah, the stock is up about 34% year to date, and it's been a really good stock. I mean, they had a good quarter, a great quarter. They continue to take market share versus network appliance. I continue to think that they're going to take market share from network appliance and others. And I think that their security business is a real hidden gem at the company. So I like it. It's just that we made money, so we took a little bit off. It's still a core.
Okay, and what about Cisco? I think Cisco is something that for the last like 2-3 quarters it didn't report really well. I think with the government slowdown, with their layoffs, with our U.S. austerity, Cisco was trying to get orders from them from the public sector, but I think they've absorbed that. We talked about it as a value play below I think 15. Earlier this year we talked about it getting some momentum above this 19, if you remember, and now it looks like it's ready to go again. Yesterday was a nice day. It showed relative strength for a trade. We talk about trades, we talk about rules. Well, when the market was lower, it was up. So it gave you some insight to buy it, and then it cleared this level. So if you bought it yesterday as a trader, I think you have some room. If you look at the monthly chart, over here, this also has, 22 to almost 28 is that area of resistance moving forward. So if the mega cap rally stays intact and you want to be in Cisco, it's not that sexy. I think 22 to 28 isn't out of whack.
The interesting about Cisco and the sector, the networking sector, is that they have been fighting against the service providers. Service providers haven't been spending money on the certain types of equipment that Cisco and Juniper make. And we're hearing rumblings that the service provider companies are going to start to spend again. And that would be a positive. That said, the company just spent $5 billion on a video company that less than 10% growth, and it's not going to improve their growth. And a lot of people have problems with their growth rate, and this deal is not going to help that. So for me, there's other places, again, to put your money, but I understand why you would want to maybe hold this position, particularly if the service provider market starts to come back.
Okay, so there's definitely ways to continue to manage the mega caps. You can't chase excitement there because some of them aren't growing as fast as others. You could stay the course, but again, you could trade in, trade out based on your time frame. So now talking about trading, I'm going to give it back to Stephanie because she's going to throw out the quick hits at me. Stocks that tend to move just a little bit faster.
And we're going to do this really quick.
Yes, quick.
Okay, let's do LinkedIn.
LinkedIn, we started talking about it at 87. It had a nice move. It was not getting through 95. Yesterday, it broke below support. Got a lot of us out of it, but when it popped back up in on volume, I got back involved, my traders got back involved, and now look at it today, it's upgraded by Goldman Sachs. I was hoping to be able to buy this thing through 95, but it's opening above it. If it comes back and tries to retest 95, I'm going to be adding to this position. I think this stock can go to 100 or even eclipse these highs of about 110. Unfortunately, they're taking some of the trade away by opening above 95, not being able to trade it through. But yesterday, you did have a sign to buy some as it traded below the range, came back above. That's a red dog reversal. We know what that means. That means you should be be in at least tier 1.
Good. Apple.
Apple, everyone's trying to just call a top in and to make a name for themselves. And meanwhile, every time we talk about it, everyone's like, it's really cheap, the valuations are really low, but be careful, don't own it. You know, as an investor, I think you stay the course with Apple. I think our target has been 700 to 720. As a trader, there are times when you need to take more risk or less risk. And right now, if you look at the chart of Apple, you will see stock is just holding each trend. Here is a gradual trend that we were holding, and now here's a bit of an accelerated one. We're opening above or opening near 606.90. I think that if it trades through yesterday's high, you're going to see, you're going to see a pop. But again, if you're trying to short this thing, there have been very, very, very small opportunities to short. You have to be a real micro scalper at this point. Stay the course. Just don't chase the excitement. And taking profits along the way, if that's what you want to do, is cool. You can even actually sell some calls if you want to just get some extra premium and you want a little bit of protection.
Well, now you have a buyback and a dividend, so that's not so bad. How about Baidu?
Baidu is setting up. Baidu has been one of those stocks that almost drives me to drink, even if it's not a Thursday. But anyway, the stock is getting tighter and tighter. I tried buying it right here on this day and it failed, but look, it's been holding up really nice. The old red dog would say, you know what, it got me, I've lost money, but the new red dog saying, you know what, this downtrend is still here. It hasn't been ready yet. This stock gets above 140, 141. You're going to see a nice move, a kind of move that surprised everyone except for guys looking for the apex to change in Amazon.
How about, well, we can do Amazon. You want to do that one?
Yeah, well, Amazon, I've been talking about the macro bearish pattern that has been setting up because of the relative weakness, but I showed you the pennant, I showed the apex getting tight. I said, so here's what it is. If it resolves to the downside below 177, you get short. If it goes above 186, 187, you get long. Yesterday, you look at Amazon, look how tight this pattern's been getting. Okay, here you go. It's not rocket science for traders, it's just patterns. You have a high, lower high, lower high. What happened here? It broke that trend, traded above it. This uptrend it was following never broke below. So yesterday as a trade, Sperling was all over it. Guys were tweeting about it. Nice trade. Next level here on Amazon is getting close to about 200, and then we'll try and figure out what the next trade there is.
As much as Apple is loved, Amazon is hated. So I think that there's more fundamentally that can go right in terms of Amazon, and the stock could certainly have a nice little move. So hopefully you're right and I'm right. And we'll see.
Well, we'll see how
JP Morgan.
JP Morgan. This has been a name both of us have been talking about since the beginning of the year. It continues to lead the banks. Yesterday, thank goodness, JP Morgan gave me some clues that I was going to go positive. That this sell-off is not going to be extreme. It's going to be shallow. So Goldman Sachs, so Bank of America. So the banks continue to lead and continue to give you clues on what's going to happen for the day in the market. So I think JP Morgan, still probably has upside. It's hard to just initiate up here.
Yeah, no. I mean, it's had a nice run, right? I mean, even so, it still has lagged the big five. I always look at the big five in terms of comparing, the banks. Bank of America, Goldman, Morgan, Wells, and it's lagged the group. It's done nicely though year to date. I think you still own it. I think low 40s is where I would rather buy it than mid 40s. But it's going higher. I think over the long term.
Right. Long term, we'll take a quick look at this chart because it's been something so nice to ride and watch. If you look here, this was that last breakout. This was above 39. Came in, retested, then cleared it with power. Look at the power here, okay? And then, continued. Actually, what was the day that Buffett came out? Because we talked about it. He said he was putting in his PA account. I think it was right here. Buffett said, I'm going individually long JP Morgan. Why wouldn't you follow Warren Buffett, one of the most successful investors out there? And that was this day. And you could have seen it. You could see the potency here. Right there was your ad. And now look where we are. If you go to the monthly chart, let's see some levels out here. Oh, it's coming into some big levels.
Yeah.
Okay, if you look here, right around this 47 to 50, it's going to be tough. But if it starts taking that out, oh my goodness, is this market in for it? Actually, let's go. I think we even go even longer term to see here. So it is coming into this area. This would be an area to take some profits after a big move. But if it can go sideways and continue to go sideways, in the next few years, there's no reason why it can't get back up to this 65 area.
Yeah. So as a long-term investor, that's what kind of we're thinking. We're not, we've had a nice move in the position short term, but longer term, we do think that this stock should trade at a premium to tangible book value. And right now, it's a slight premium. I think it should be much higher than where it is.
So once again, quick hits turned into the long form
version.
Spotlight.
I tried.
We'll try and do that better in the future. So to wrap it up, basically you have to figure out your time frame. You have to know what you're looking to get out of the market. If you approach it with a plan, you could trade through the rotation. You could own some stocks. You could add at good breakout levels. You could use a tier system. You could use a management system. But just don't be miserable. There are a lot of guys out there that have missed the rally, that they're trying to revenge it. They've been now short for 2 weeks, and they still have to keep calling a short out there just to make it be vindicated. don't try and get vindicated by the market. Just try and approach it with a plan, because when it confirms it, you could trade it, you can make money. And I do think over the course of the next few years, it's going to be a lot better than the last few. So start now if you're not getting the performance that you want.
Yeah, I mean, the U.S. is on the mend, certainly. We have some issues globally, but I think that they will get resolved with global easing. That should be positive, and fundamentals still remain pretty attractive. So I think from a portfolio manager's point of view, you got to trade around positions. Don't get too lazy and sitting on your laurels a little bit. But and that's what we've been doing. We've been actually trading around core positions and looking for opportunity. I still think there's a lot out there.
And I agree, and I think the only way you're going to get those opportunities is by educating yourself and taking accountability to learn how to do so. So if you're watching this call, if you follow Stephanie, if you follow T3 Live, if you follow Real Money Pro, you're doing the right things to get there. Keep doing it, keep working hard. There's a lot of money out there. Just go with an optimistic approach instead of just trying to revenge or be miserable, or just think that in the past the market got me. So you go get it. With that said, have a great day trading, and I'll see you at the recap later.